Hello traders, Cousin Vinny coming to you from theclosingprint.com on December the 29th, 2019. In this edition of your weekend video newsletter, we'll discuss the probabilities that the markets could continue higher. Despite the tax loss selling we saw on Friday, markets did pull back a little bit. We did finish near all-time highs. The London Stock Exchange did move a bit higher, and we see some possibilities with the Hang Seng for the Chinese stocks to continue higher into the new year. The FANG stocks, in addition to the tech stocks that we follow like Microsoft, Intel, and Tesla, also moved higher. Netflix and Nvidia took a breather. Bond stock ratio is bullish. Tick and TICQ showing sentiment has been bullish for 4 weeks straight. The fast signal did cross lower, mostly due to tax loss selling, most likely. But we do have to keep an eye on that for a peak and a potential for the markets to pull back if that indicator does reverse and move lower. NYMO and NAMO are showing signs that they could be turning lower as well. Put-call ratio is neutral. The dollar did pull back, so that's good for commodities. If you're trading any of the gold, copper, crude oil stocks, those could continue higher. The heat map has been improving. The international markets, we did see the heat map turning a little bit more yellows and greens with Argentina, Brazil, the Hang Seng, China, the Asian stocks moving a bit higher, as well as North Korea. We'll look at some IBD 50 names this week that look promising, in addition to MarketSmith Growth 250 stocks and the top 20 volume percent gainers in green. Volkowski is showing 505 green with a CPI signal at 63.4%. That's back to neutral after being extremely bullish over the last couple of weeks, with 15 bearish patterns, 26 bullish patterns, and more importantly, 593 patterns waiting for breakout. Bottom line, we are a bit extended, and I wouldn't be surprised to see a little bit of a pullback to start the new year. The ARCA Institutional Index is moving a bit higher. It is bullish. This is the 75 stocks most commonly held by institutions in their core portfolios. Some of the names that you probably recognize over here on the left. Most importantly, what we're looking for is price action staying between standard deviation 1 and standard deviation 2, which is telling us to stay bullish in the short term. We're also watching the 1,500 stocks in the S&P composite. This is the S&P 500, S&P 400 mid caps, and the S&P 600 small caps. Continue to show a bullish signal with histogram confirming and price action continuing to rise. We did get a blue stick on Friday. Bollinger Bands are opening up, telling us that we could see further upside, barring any catalyst that we don't currently see to impede progress for moving higher. Given the tax loss selling that we did see on Friday, the New York Stock Exchange new highs, new lows continued to spike higher last week, which was a little bit surprising when I saw this. That said, we do have NYAD, the New York Stock Exchange Advanced Decline, at all-time highs. It did turn back down again, most likely due to tax loss selling. And we do have blue and green elder sticks, no red sticks, giving us a warning at present as price action trades at all-time highs on all of the major indices. The Dow Composite is also pushing higher, did tag the upper Bollinger Bands last week. Bollinger Bands are opening up. That's telling you to expect volatility to continue increasing. If we saw the lower band starting to turn in the upper band as well, that would signal a possibility of a sideways pattern, which brings to mind the idea that we don't have to pull back in price. We could always flag and consolidate by moving sideways, which seems to be what we've done quite often towards the end of the year, where lots of price action and gains have been consolidated by just moving sideways for a few days' time before assuming the upward trend into the end of the year. So that's also a possibility with the Dow Jones Composite. 65 stocks in the transports, industrials, and utilities group as it continues to move higher. We did have a spinning top on Friday, so we're watching how price action reacts going into the new year. The NASDAQ 100 was also very extreme, mostly comprised of technology, biotech, and high growth stocks. We had a spinning top on the weekly time frame, trading at all-time highs. We don't have to pull back to consolidate these gains. We could move sideways like we've seen previously, though logic would suggest that we should pull back a little bit, you would think, just to give indicators like RSI a chance to unwind a little bit before moving into January and February. That said, momentum indicators are above their signal lines. MACD continues to move higher. Volume was below average last week as we reached all-time highs. All things considered, the one laggard that we saw last week was small cap stocks, which didn't make much progress. It's not at all-time highs. This would be considered a risk-on indicator. Investors tend to chase small cap stocks when they're confident the markets are bullish and there's nothing to worry about. That complacency, however, could start to spell a little trouble. So keep an eye on small caps in the short term. Right now, we are bullish. RSI is near 70, but not overbought yet. Volume has been above average over the preceding weeks, excluding last week, of course, and MACD is still above its signal line and rising. So this chart is more bullish than bearish, showing a little bit of consolidation to end the year. If we break down those 1,500 stocks, the S&P 500, S&P Mid Cap 400, S&P Small Cap 600, and the NASDAQ 100, as an additional breadth indicator, we can see that breadth has faded back towards the zero line. So this is actually a good thing in the short term. If price action manages to stay at highs and consolidate sideways, and breadth improves by pulling back a little bit and giving us energy to push higher, that would be actually a good thing. We'd also want to keep an eye on NYMO and NAMO. NYMO is starting to show some signs that it could be peaking. We do have the NYSE showing blue elder sticks, no red sticks yet, while the cycle in the McClellan oscillator for the NASDAQ did start to show a peak and turned lower. So we could see a lower high here. Watch for a blue or a red elder stick to start the week. And the big cap tech names if you're trading any of those in the short term. Also keep in mind that starting off the week, the short-term 60-minute indicator is red. So this VIX signal is telling us to expect to see lower lows and lower highs as we start the last 2 days of trading for December. Since we cannot rely solely on the equity markets to give us signals, we also need to keep an eye on bonds, currencies, commodities, international markets, the money flows between all of these instruments and assets. In this case, we see the bond stock ratio in the lower panel. The ratio between the 10-year UST and the S&P 500 continues to drop. As it did back in 2016, as it rolled over, the moving average dropped, the ratio dropped. That was bullish for equities. We also point to the 10-year yield, which is a pretty good barometer for equity price appreciation when the 10-year rises, like it did in 2012 and in 2016. These reversals led to bullish markets that lasted anywhere from 2 years to 18 months. And a nice appreciation in stock prices. It wasn't an easy road higher. There were periods where we pulled back 1 to 5% along the way. And what we've seen recently is a breakout and a continuation in the 10-year in the short term. So overall, the momentum, as you can see in the upper panel, looks bullish for equities. We also note that high yield corporate debt, HYG, and junk bonds, J and K, are in a bullish trend. They are at the extremes at the top of their Bollinger Bands, which means in this overbought condition could see a little pullback. Bond yields tend to be a barometer, in this case HYG and junk bonds, of any substantial pullbacks, and what we would look for is what we saw back in late 2018, Again, a different environment. The Fed is overly dovish at the present time, not hawkish like where we saw here. The takeaway is if we start to see yields moving lower, this is a risk on, risk off indicator. This would tell you to start taking more positions off and to reduce your risk. Presently, we see the opposite condition with a mostly bullish chart as a reference point. And of course, with yields moving higher, bonds by contrast move lower. We do see the 20-year bond continuing this descending rebalancing or distribution pattern at highs after a 12-month run. Again, when the Fed got very hawkish, this took us on a 12-month journey in bond prices, the 20-year in particular. Presently, we're below the moving averages in a descending pattern, telling us to be more open to the idea that equities will continue to outperform bonds into 2020. That said, we do have the AGG, Barclays Aggregate Bond Fund, in our retirement portfolio. We still hold a small position. This has been moving sideways, looks pretty good. It's above the moving averages, had a bullish week. MACD continues to fade, leading us to believe this consolidation will eventually test the bottom part of a range. Looks like a little triangle pattern. In the short term, this is just telling us to keep an eye on bonds while favoring equities going into the new year. When we look at currencies, we did see the British pound US dollar outperforming. The dollar did move lower. We'll talk about that in a second. The British pound moved higher. Despite that, we did see a nice follow through in the London Stock Exchange and the FTSE last week, moving higher, continuing this bullish trend. Seems a bit overbought now, but price action does look pretty bullish. We're looking for a test of these highs over here. Over the last couple of weeks, we're finally getting to that level. And volume suggests that investors continue to trade the stocks on these exchanges. With that British pound US dollar pair moving higher, the US dollar, of course, had to be moving lower. We did get rejected at the 200 period moving average. Looks like we're going to test this previous low here, and then possibly the June lows. If that's the case, then we would see commodities moving higher in response. As we can see here, copper continues this bullish trend. This is a leading economic indicator. Construction-related builders and building products stocks that populate these groups. Copper continues its bullish trend and most likely will test these highs over the next few weeks as economies around the globe improve. In addition, with the dollar moving lower, we spoke to the idea that gold would break out of this descending channel that lasted for over 15 to 16 weeks. We got that last week. It's a little bit extended now. We are above this volume by price band. So if we do pull back to 1510, that might be an opportune area to get into some things like GDX or Newmont mining. Most of the miners look pretty good going into the week. I know Brian Flood was trading this one. Look for a little pullback for potential additional area to start a new position or to add to your position. Looks like this is going to continue to move higher. There's no overhead supply, no one to sell it to you as we continue to move higher. That, of course, would happen if the dollar continues to move lower. In addition, with the lower dollar, we expect to see crude oil moving higher, 8 weeks above 20-period moving average, climbing. We were looking for these $63 a barrel levels to be tested over the last few weeks. We're starting to see that now. Volume is tapering off a bit, but MACD is above its signal line and rising. This has a bullish correlation to equities, so if crude oil continues to move higher, keep your ears open. That would lead to equities most likely moving higher as long as that correlation remains in effect. The sector heat map did improve last week. Note the areas in chartreuse green, which would suggest the stronger sectors, oil equipment, exploration and production, energy names, all performed well last week, in addition to healthcare and health equipment, medical devices, semiconductors, and telecommunication stocks all improving. International markets also looked pretty strong last week, with the Hang Seng Hong Kong Stock Exchange continuing to break out. This one looks pretty promising. In my opinion, MACD is above its signal line. I know not many people are trading it. We do have some names in the trading room. People have been trading. People have been in over the last few weeks, like Alibaba. Do watch this index. This is probably going to continue higher. Stocks, ETFs like Pinduoduo and CWeb, etc., all look very good. You can see how strong this looks coming off of the 200 period moving average on the weekly time frame. This could perform like EEM did over the last few weeks. Some of you traded EEM off of the 200 period moving average on the weekly time frame. And you can see how this broke out compared to what we saw previously. Yet to break out, but moving above these recent pivots for the Hong Kong Stock Exchange. And most likely will test some of these highs in the short term. So look at the Chinese stocks. There's many of them that we'll cover most likely live on Monday and Tuesday. There'll probably be some nice opportunities there to trade over the next few weeks going into 2020. We also made a note that all of the major sectors that we follow, real estate, transports, materials, communications, energy, financials, industrials, technology, staples, utilities, healthcare, and consumer discretionary are all above their 20 and 50 period moving averages. Some of these do look better than others. Some are fairly extended away from the 20 and 50 day, like energy, which is showing a potential for this to pull back a little bit. There's a lot of small cap names in the energy group that we've seen a lot of strength in over the previous few weeks. Something that we need to keep an eye on in the short term. Industrials look pretty strong and promising, so do financials. Not too extended. We do have utilities and staples, a defensive group, along with healthcare that could continue to move higher. You can see healthcare move sideways to consolidate recent gains. We don't have to necessarily pull back in price, something that we would keep in mind. I'm keeping my eye on consumer discretionary. There's a lot of stocks in that group that look pretty promising, even if we are a bit extended away from the 20 period to start the last couple of trading days in December. Here is the IBD 50 for the week. One of the things that I'm paying very close attention to is how far are we away from the 20 period moving average? Are we very, very extended like we saw with Alibaba? Been in this relentless trend over the last 5 weeks. As it continues to move higher, it was only one little blip 4 weeks ago. Otherwise, this one's been in a pretty strong trend. This red candle on Friday could just be due to tax loss selling, though the stock is at all-time highs. There's a little bit of weakness there. Still in a very bullish trend. Overbought, MACD above its signal line and rising, starting to show a sign as a function of price to move a bit lower. Volume has been pretty strong, showing institutions have been buying the previous couple of weeks. So it does look pretty strong. We're watching this. Maybe it moves sideways instead of pulling back. As we did point out, Hang Seng is just starting to move higher and break above recent pivots, and most likely will continue to move higher. HCGL, this is one that we've had on the watch list for weeks and weeks. This continues to look very strong. Nice little flat saucer sort of base. Beginning to spend more time above the 21-day moving average and the 90 MA on Friday, showing relative strength, RSI rising, MACD above its signal line turning higher, and volume increasing. This has probably got a good shot at breaking out this week. So watch Arch Capital, ACGL, going into the week, as we are looking for this to continue higher. Air Lease, this is showing you some of the things that I'm watching for this week. We have a nice bullish trend. Each time this has come down to the 90 MA during the month of December, buyers have stepped up. So that would be the first thing I'd want to see on Monday or Tuesday, is to see a bullish candle, something like we saw here and here. RSI is a bit overbought, so we could pull in a little bit. Watch for a bullish candle on Monday. If we see that, we could potentially have a follow through this week. in this particular stock. CDW, purveyors of hardware, software, and technology security products, continues to trend. Again, this is another example of a nice bullish trend. RSI remains above 50 for most of the year. The trend is intact. Price action hasn't come down to the 9 EMA since the beginning of December. Has continued to move higher. Maybe it comes back a little bit. Maybe it keeps trending. So look for a bullish day on Monday. MACD is above its signal line. We'd like to see more volume in order to assume this is going to continue higher. Chipotle Mexican Grill, CMG. This one moved higher Wednesday, Thursday. Did consolidate a little bit on Friday. We're looking for this to test the highs again. I know Robert Kaplan was trading this in the live stream run this week, looking for a follow through. Maybe a test in the 9 EMA in the short term. Comcast and other names in the communications group, along with Facebook, Disney, Netflix. Netflix did pull back a little bit. We're watching names in this group as RSI continues to rise and price action moves above recent pivots. It's showing no signs of slowing down yet. MACD is above its signal line and rising. So I would love to see a little flag first. Maybe by Thursday or Friday, we could see a follow through. We got a holiday this week with New Year's, of course. So keep an eye on Comcast and other names in the group. Maybe some potential here. Copart, also another stock, RSI above 50. We got a nice trend intact, and MACD is flat. So most likely this is going to consolidate a little bit more. Look for stocks in this group to continue higher at some point. Right now they are consolidating along the 9 EMA. Flagstar, Bancorp. The banks have been looking pretty strong. We're looking for this consolidation above the 21-day. The test on Tuesday to lead to potential higher prices. JP Morgan, one of our favorite banks to trade, looking a little bit better. While stocks in the building products group like Floor and Decor continue to look pretty strong. This trend that broke off of the 200 period moving average, price moved back above the 21-day back in November, continues. Looks like a little cup pattern, a handle forming. The handle is supposed to eliminate the last of the sellers. Once this breaks higher, this continuation pattern would lead to higher prices with the depth of the cup around 10 points, giving us a target of around 63. If you're thinking about longer term swings, stocks like these are set up going into the new year. Remember what the copper chart was telling you, that construction, building products, and builders are looking a little bit stronger and most likely will continue higher with lower interest rates as catalysts for these industry groups to continue to improve into 2020. Franco-Nevada and other stocks in the gold group most likely going to see a little bit of a consolidation, a little pullback. Maybe by the end of the week we'll get a little opportunity to trade these gold stocks again. Short term, I'm thinking that they pull in just a little bit. Doesn't mean that they're going to reverse and start to fall back towards the 200-day. I think this is going to continue higher, especially if we see the US dollar moving lower back to those June lows that we pointed out previously. Genpact, pointed out last week, continues this trend. Did move sideways for most of the week, so we are looking for a follow through. It looks like it almost tested the 9 EMA on Friday, showing a little bit of relative strength as it holds the 9 EMA and the trend. IDXX, this is one of my favorites in this particular industry group. IDEX Laboratories specializes in pharmaceuticals and medical products for animals and the pet products group. Look for this one to continue higher. Note that it had relative strength. Buyers stepped up at the 9 EMA on Thursday and Friday. Looking for this to follow through. Volume started to increase on Friday. Look for a breakout above these levels and a test of these pivots, and then eventual test of these highs right around 300 in the short term. As RSI continues to climb, MACD is above its signal line, and we get standard deviation turn back up. InMode is a sort of wild card. I'm not really happy about the price action in this particular name. Do note that we had this nice consolidation. We had a breakout. Sometimes stocks will consolidate by pulling back into a obvious descending channel or wedge pattern. Eventually will break out. Got caught on this a couple of times, got stopped out. Didn't follow through like I thought it was going to. But I do think eventually this Israeli medical products related name will eventually move higher into 2020. Intuit financial software, also maybe H&R Block will continue to move higher. This one's starting to turn off of the 200 period moving average, not too far away from the 200 period. If trends do persist that we've seen previously in this particular stock, we tend to see December through March and April appreciation in price action going into the tax reporting season. So look for Intuit to continue to move higher. RSI is above 50, MACD is above signal line and rising. Would love to see more volume going into the first few weeks of the new year. Comparing to what it did last year in late December, followed through and rallied all the way into the tax reporting season, then pulled back to the 21-day on the weekly time frame. JP Morgan, as previously discussed, look at the muscle and RSI continues to stay embedded, which tells you this trend is extremely strong. I've been anticipating that every once in a while it'll come back to the 90 MA, 21-day perhaps. Those opportunities are the ones that you need to capitalize on. I know Brian Flood traded this one recently. These pullbacks to the 90 MA most likely will get bought, and you could see a nice 2 to 3 point run if you're trading it short term. So look for those opportunities over the weeks ahead in JP Morgan. Merck and a lot of consumer pharmaceutical stocks are consolidating. Merck has been moving sideways over the last week. Watch for this consolidation pattern to eventually break out. Could come down and test the 90 MA. I'm looking for an opportunity on the first bullish candle. Microsoft software, obviously a little bit of a extended pattern. We could see this pull back a little bit to the 90 MA. Very bullish since breaking out. The target, of course, if you remember, is 168 on this one. Based on the weekly chart that we pointed out previously, you had this base reset, first stage base, leading to a 20% or greater gain over the following weeks, then consolidated in a second stage base, then broke out. The depth of this pattern and a 20% increase on this breakout would give you a target of 168. That said, if you are in it, just keep tightening up your stops and moving it higher. If you're swinging Microsoft, it does look very strong. Momo is one of the few Chinese stocks that doesn't look very good compared to some of the other stocks in the group like PDD, Pinduoduo, which we started a position in last week. Pushing off the 21-day, if this starts to expand, you can see here standard deviation when it does have these blips higher, that it does signal the potential that we could have something similar, maybe not as great, but at least maybe half of that magnitude in this move we saw here. Nowhere near that at the present time, so there is still potential for upside in this next swing in PDD, as well as some of the other Chinese stocks like Alibaba, previously mentioned, Vipchops Holdings, which continues to move higher, Baidu, which is trading at the 200 period moving average. If this does break through this level, could lead to higher prices. Weibo, which has been trending, we're looking for the 50s again on this one. Tested the 90 MA last week. Remember, Hang Seng is breaking above recent pivots, showing potential for higher prices as institutions and traders, investors take a little bit more risk on, a little bit more value there because of the levels that the Hang Seng are coming off of. A lot of these stocks will most likely continue to appreciate into the new year. NMIH Holdings, I'm also looking at this one. Got a hammer on Friday, looking for this to pop back up. It has a tendency to hammer and then follow through. Hammer down here, follow through. Hammer down here, follow through. So I'm watching how this plays out on this $30 stock this week. Could be an interesting opportunity if MACD can turn back up as a function of price, of course, and volume can increase and RSI can stay above 50. That's a lot of ifs, but something that we're watching very closely to start the week. We're also watching stocks like Netflix that did pull back to the 90 MA, setting a potential opportunity here if we do see a bullish day on Monday. There's always a possibility we could pull back to the 21-day first and this breakout zone. That would represent a great opportunity if we saw that, though I'm not expecting that we will see it short term. All depends on price. Let's see it first, and we'll trade Netflix once it gets to that level if we don't follow through on Monday. Nike, of course, in the consumer discretionary group, pointed out that is one of the sectors I think is going to outperform this week. We'll see. Very surprised to see Nike doing as well as it did after its CEO stepped down. Looking for a follow through at 52-week highs. This one continues to move higher on above average volume, showing that institutions have been picking up shares. This is one of those stocks in the XII ARCA Institutional Index, which institutions hold in their core portfolios. Nike is one of those stocks. Paycom looks good coming off the 9 EMA, looks very strong for this week. RSI rising. Another stock in this group, PCTY, also looks good. Look at the hanging man candle, looking for a breakout, as well as PayPal, which looks very strong. Consolidating along the 9 EMA, most likely rises this week. PFSI back above the 21-day. Maybe this gets going. Planet Fitness pointed to this one over the last couple of weeks. It's finally pushing off of the 21-day. RSI is rising. We've got standard deviation barely moving off of this level. So that's telling you that previous pops that we've seen where this standard deviation indicator continues to push, we're nowhere near that extended level yet before we see a little pullback or consolidation. So look for Planet Fitness to break out on this next wave up and maybe test the 78, 79 level in the short term. As RSI continues to rise and MACD is turning, showing the momentum is just now starting to shift towards the bullish direction, most likely will lead to higher prices over the next few weeks. Royal Gold, another name in this group with the dollar moving lower. This one should continue to flag a little bit, perhaps, and then take off to the upside and test some of these previous pivots over the next several weeks. RSI suggests there's more upside, so look for potential in some of these gold stocks as well. Salesforce, double top. Does it break out? RSI suggests it might. It still has room to run. Volume has been picking up. MACD's above its signal line. I think it's a pretty good shot. One of the premier names in the cloud-based human resources industry group. MACD above its signal line, rising, volume increasing, and RSI above 50. ServiceNow pointed out last week the test of the 9 EMA, looking for a follow through. We got it. Continues to move higher. RSI suggests we could see this continuation of this breakout. MACD is above its signal line, suggesting bulls are in control, and RSI is rising. Like to see more volume to start the week. StoneCo, been looking for this one to break out, push away from the 21-day. Hasn't happened yet. This was earnings over here. So it's been several weeks consolidating along the 21-day moving average. Stryker Corp, 2 days at the 9 EMA. You can see the wicks underneath these candles telling you that buyers are at the low of the day. Looking for a push higher. RSI suggests we could see price action accelerate to the upside. MACD's above its signal line, and volume started to increase on Friday. Toro, looking like this one could follow through. It tested the 21-day on Wednesday, followed through, big candle on Thursday. Looking for a follow through. If we start to accelerate, this one could really get going pretty quick. Volume is showing institutions have been picking up shares, and MACD is just now turning, showing momentum is in the bulls court going into this week. Varian Medical and the healthcare group. Healthcare has been very strong. Note that we've consolidated sideways for the last 2 weeks. All of these gains, rather than pulling back in price to the 21-day, we just consolidated along the 9 EMA. So look for this to break higher at some point. Big cup pattern. This is typically a continuation, though not a guarantee. We would look for higher prices as healthcare stocks remain very strong. Visa, along with the other payment processors like MasterCard, PayPal, all moving higher. This one broke out above this pivot that we were looking at over the last several weeks. Congratulations if you traded it. Volume increasing, MACD above its signal line, and rising. Zito Express broke out last week, kind of like Yandex, which broke higher and just continues to trend. Both of these stocks, we're watching names in their industry groups for potential trades. Otherwise, these are a little extended, looking for a little pullback in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I have relatives visiting for this week. I want to spend time with family. Do look at the watch list and the names that we also have here down below. Market Smith Growth 250 relative strength names that show similar potential to the ones I just reviewed with you. Also watch the hotel stocks. Many of these like Hilton, HTHT look very strong. WH, Wyndham Hotels. We also saw Waste Management looked really good. Some of these names in green, that's the top 20 volume percent gainers. A lot of these look like they're going to continue to move higher. So review these names. Also look at 5 below. This one looks like it's going to continue higher. That's in the consumer discretionary sector. All of these look very strong. Boston Properties, ConAgra. I know Leastar was trading this one. Look for these to move higher. Look for your watch list around 11:30 on the East Coast, 8:30 on the West Coast. Otherwise, have a great weekend, and we'll talk to you soon. Take care.